Are you ready to make some money?
Have you ever heard of Robinhood? Small world. Me too. Do you know someone who's made a killing on Robinhood? How about anyone who's lost money on Robinhood? But does it make it good or bad either way? No. Robinhood, much like any trading platform, is just that, a trading platform. One in which you, the user, get the option. You, the user, have the option of being able to use it to the best of your ability and any of your desired level. And while I've made way more money than I've missed out or lost while trading, I thought it'd be useful to some to be able to hear some of the things that have held me back or lost me money while I've been trading on Robinhood. It's clear to me that we're experiencing some sort of technological revolution right now. And with that, there's been this enormous surge of new traders and new users to these platforms, both by the fall of traditional income sources and also by the rise of simplistic tools for free and easy trading. You can hear this sort of news boiling up by prominent figures in the finance space.
Which brings me to the tipping point number 6. The Robinhood crowd and their fellow travelers. We just use that. This is a shorthand. I know that there's many guys. But it's what people talk about. They go Robinhood, the hoodies. We tend to view the hoodies as day traders pouncing on short squeezes. But I think there are people who bought stocks at the absolute low in March and April when older professionals were cashing out. They made some huge bets, in some cases with government money, and they've learned how to do their own research. They do not rely on Wall Street research. They can Google it themselves. They can figure it out. They go to the websites, do all the things that they should be doing. I wish Wall Street would stop looking down on them. These younger investors have changed the character of the market, turning into a stock picker's paradise.
What do you think about it all?
Yeah, I think that there's two parts of the market. There's the cyclical market, which is doing very, very well. And then there's the speculative part of the market, which is insane. We've got a lot of stocks that everyone must think are the next Teslas. And you see those go up so much that you begin to say, well, wait a second, can that continue forever? And those are the stocks that I'm really watching because they are the so-called Robinhood stocks. There's a lot of other people who buy these now, but everything they buy goes higher. And so that's what I'm focused on is can that continue? Because that speculation is usually met with some sort of big sell-off. Hasn't happened yet, though. You get blindsided by all these people who are first-timers who don't really care about things like earnings per share or revenues per share. They just like it. And we haven't seen something like that. I don't even know how long. It's not 1999.
Because it is, in some ways, an irrational market, although you could probably say that at a lot of different points that the markets are irrational.
I don't know if it's dangerous. They don't seem to sell it. I don't know. I don't know where the demand comes from that they don't even care about. They don't even care about dilution. Then you have things like Palantir. Palantir doubled, but nothing happened. So maybe Palantir offered it too low. But, Becky, I've not seen this in my career. And I think we have to recognize that there's like a whole group of people. Maybe they're Reddit buyers. I got people criticizing me for not doing my homework on LI. Well, I don't know. It doesn't have any. It's just a Chinese van company. Becky, it's just look at Lee. Look at that. I got people saying, how can you tell us to take profits in Lee? And there are people who think I'm a war criminal because I want to take profits in NIO. But NIO went from 10 when it was on 60 Minutes down to 2. And now NIO, it's like, these are ridiculous. The most speculative market I've ever seen.
I'll tell you. I was going to say, Jim, what a confluence of headlines. And then you layer on what you were just talking about with Becky, this seemingly endless generational bid for stocks in general.
I've never seen anything like it. Where are the profit takers? David, where are they?
I don't know.
So in such an upswell of new money flowing into emerging markets, and with all sorts of geopolitical movements that are affecting and impacting the ways certain companies and industries operate, it's best that we all find out the ways to do the worst ideas less, and for us to make sure we implement the best ideas more. So, in no order whatsoever, here's a list of a few things that have lost me a bunch of money on Robinhood. First thing, I was not taking advantage of my knowledge of capital gains tax. While I've only been trading for a few years, there was this one move that was sort of pivotal at the beginning of my trading, and I ended up trading a position the same week that it would have gotten to its 1-year position. And the reason I did this was essentially FOMO and just kind of not writing the numbers down. Not having a plan will end up costing you a bunch of money in the long run also. But for this, all I needed to do was wait a week and I would have been able to save the 30 to 50 extra % in tax that capital gains is versus the normal tax rate. And so that move, when I made the decision, was sloppy and it ended up costing me maybe $1,800 or so, but where that was in my trading history, that $1,800 built to where I am now is, in my mind, I see that as something that maybe cost me 5 to 8 times that amount. And so sloppy moves at the beginning are so impactful because they end up compounding into a number that's very far off from where it would have been if you would have just tightened up your principles from the get-go. And there are smart ways to utilize capital gains tax or avoid it or pull out and take a loss and et cetera, et cetera. The key will be to have a really good tax person. It's okay if you pay a bunch for a tax person as long as they are making you way more money than they are costing you. The second thing was I did not use a lot of limit orders at the beginning of my trading experience. And on free platforms, you got to imagine that they need to make money. And so when you initiate a market order versus a limit order, you are leaving the price of your trade up to whatever the market and the app is going to be doing at that time. So sometimes market orders end up being exactly where that market price was when you initiated it. But if you've ever done a market order, especially on a big order, several cents, a couple dozen cents different in a price when you have 100 to 2,500 or 5,000 shares, it makes hundreds and hundreds of dollars in difference. So if you're buying something or if you're selling something and you leave it up to the market order, yeah, you're going to guarantee that it's at least going to sell as long as there's volume happening, but you're going to miss out on the exact price you wanted to sell it at. And so take that extra time to set up limit orders so you get in and out at the price that you want, because a penny, 3 pennies difference if you're selling 8,000 or buying 8,000 shares is a huge difference. The third way would be more philosophical, and it was that for a long time I was investing without a bit of a purpose or much of a sense of direction. I felt like I was chasing things instead of anticipating things and deciding on things, and that ended up costing me a bunch because it diverted my attention to these other opportunities that I was a little more dazzled by versus ones that seemed more practically sound. And yeah, just in hindsight, especially even when the market fell this year, I was very sloppy then. I looked for recovery opportunities that would be 80% instead of simple, awesome ones that would have been 30% and ended up actually coming to, versus some of those 80% ones have only maybe made 10 to 20% gains since March. And so be focused, have a plan, and it's okay if part of your plan does not consist of you trading every day. You don't need to trade every day. You could be doing swing tradings, and you can get to a point where you set yourself up where you're set for a year financially, and all your money in the market is going to be there long term, and you have stuff that's just investing. And maybe you're a combo of all of those things. And I've found myself in that bracket where I'm doing daily trades, but with only a portion of my portfolio, and other things are doing swing and long-term investings. And so just have more of a purpose. And also this will help ease the stress on your daily load. And the fifth thing that has cost me a bunch of money, and hilariously so, is not waking up on time. The market's open at a certain time, and in pre-market trading, there is a lot of activity that happens, especially if you are in either volatile stocks or stocks that are moving quickly and have big growth opportunities. And it's just, if you don't wake up for those hours, you can miss out on a bunch of movement. Also, in the pre-market trading, you're going to get a sense of what's going to be happening throughout the morning. And now, while I've fixed this issue, there has been a handful of times where I did not set an alarm on accident, where I have slept through my alarm on accident, and where I've even gone back to bed on purpose. And it has cost me a bunch of money. I wake up and I see that things are going well. And one time I woke up, I saw things were going well, and I said, let me go back to sleep and see how good it is later on. And then you miss out on all those gains and maybe don't make it back. One time I've slept in, missed my alarms, and I missed the chance to sell at the all-time high for that day and ended up at a loss. Whatever it might be, it's just happened. If you have money in the markets and you are not sure whether or not it's going to be a long-term investment or a short-term investment, you need to be keeping your eye on things, because especially depending on how much of your portfolio is in any particular position, or during this election time in particular, it has been so volatile. Like, you don't know if any of the vaccines end up crashing and not working, like the market will take a turn very, very quickly. And so you just need to be prepared, and waking up is a great idea. Okay, maybe I've lost track of counting. Here's a couple more things. Viewing a large and fast sell-off as a given buying opportunity has also cost me money, where I have seen 20 to 40% drops in certain companies, and seemingly nothing has gone wrong with the company except for maybe an article or two, or maybe just the sell-off after earnings for a company. And you see these big drops and you think, wow, even if it gains half of that back sometime soon, this is a good opportunity. But that mindset, although I have won big with it before, I mean, some of my biggest trades were on the overcorrection from a sell-off. It does not guarantee that that stock is going to go back up / go back up anytime soon. If you put all of your money into a position or half of your portfolio into a position that you expect to bounce back really quickly, you might have your money locked up there and have to take a loss if it continues to dwindle for the next coming weeks or months. You just don't know. I believe that too many people are anticipating an uptrending market in too many sectors. Now, maybe there's some sectors that are going to be greener than others, and I absolutely believe that that's the case. But there are so many uncertainties in the market right now that you can't be so googly-eyed for the potential huge wins just because you think it makes sense. I think that a healthy dose of skepticism in your trades is really good because the market is not completely acting as it should with our economy and how things are going. And so while that could mean that it can continue to build and grow and do well, there's always the risk that some news comes out of nowhere and changes things and people freak out. And then in a day, 15 to 20% of a position in everyone's portfolio is gone. And so you just got to be prepared. And of course, there's been other things that have cost me over the years with trading, not watching volume tracking on platforms like TradingView or Thinkorswim, and just being able to see volume in the market, whether it's real time or not, or a few seconds lagged, you're at least able to get a better predictor of what's going on and just a better visualization of what's going on in the market versus if you were on Robinhood. Even if you have gold, the volume indicators and just the way the book orders look and are displayed sometimes can fool you out. Not researching any companies you're about to invest in more than a day in advance, like that FOMO getting the best of you can, as you'll find, put you in positions where it's like you're chasing the price instead of anticipating it. And that first couple 5-10% in a company's growth run is a big difference in how much you can earn versus jumping into a stock that is already at its all-time high and you kind of missed it from the morning run or something like that. So many people will tell you that maybe their biggest investment mistake was not building and starting sooner. And that is the case. For a long time, I had too much money in savings, and it doesn't grow in savings. It just stays in savings. It just kind of saves in savings. And so once I started putting almost every spare cent that I made into investing, I was able to build up to a cushion that just allowed for less dramatic moves to be able to make good money, because it's like once you get a good sum of money, it's just easier to make money. But all in all, we all have our own growth and trajectory, learning curves, and I will say that maybe the most powerful thing to learn out of this is to start sooner, but also just to take it serious. Once you make money, if it feels like house money and you start to be sloppy with it, you're just costing your future self resources. And so treat it like a job if you are trading on the regular, or treat it like concrete if you are investing. Set it and forget it. There are certain companies that we can all agree will probably be here 5, 10, 15, 20 years from now. If you don't know where to invest, go there. Those are safe bets. But there's so many places for you to learn, and best thing here is that you care to do so. And so keep it up. Check out my links, some free stock if you're not on Webull or Robinhood by any chance. But other than that, I'll be back with some video on some sort of something in the future. Happy trading.